Hello everyone, welcome to our new webinar. Let me know if everything is fine. Can you hear my voice? Last time we had some issues with microphone. So if someone can let me know in our chat box if everything is good. Brian is here. Okay, I'm very not that loud. Okay, someone says that audio is good. Okay. So Brian is here, Yaha is here, Anis is here, Alex as well. So, as you know, last week I was away. I was skiing with my family and friends. We had some very good time away from the screen, despite the fact that half of my family has been sick in the last few days of skiing. But still, we managed to find some and have some very exciting, interesting moments. As well, it's the same with the markets, right? We are seeing some very interesting volatility. We are seeing dollar that gapped higher, where global stocks are moving to the downside. It's all because of Trump that he delivered actually his promises regarding tariffs and imports from Canada, Mexico, and China. So I'm quite surprised that markets are surprised, because obviously Trump has announced this already before, but still market looks like it's a very big disappointment. But what's very important is that trade wars will not stop here. We can already see that Canada and Prime Minister is responding, and we will most likely remain trapped in between this volatile price action, and it will be quite hard for US dollar, in my opinion, to stay in this recovery. I still think that there will be reversals because, as I said, it's not only US that will bring on tariffs, that there will be maybe other and more important decisions from other countries that will cause reversals on the FX. As we know, those gaps that occurred through the weekend normally will get filled. Some of them are already being filled, especially on cable. So we will see what will happen through the week. We will obviously get more of data, more of unexpected decisions and news from this topic. But if you're trading FX, it's maybe very important for you to be very selective and rather trade currencies that are not from countries that are not on Trump's list. So, for example, pound, Swiss franc, this can be much better choice than maybe euro, Mexican peso, Canadian dollar, and so forth. So, but overall, in these kind of situations, you just have to make a step back and look where the markets are on a higher degree scale. And if we look here on the dollar, nothing has really changed from my Elliott wave perspective. We still have these 5 waves down and now ABC movement here into this resistance. Of course, maybe we'll see another retest of the highs after this recent gap higher, but overall I just still think that we could see a reversal to the downside, and that as I said earlier, I don't believe that this is just one trade here in favor of the US dollar. Of course, if there would be some fears because of this tariffs and potential recession like they predicting in Canada and Mexico, of course, this means that there can be some domino effect and stock market could drop further, and obviously US dollar will rally as a response to the upside. But overall, as I said, there's still a potential corrective movement here with wave C in very late stages. Basically, I prepared 2 wave counts. Now the first and the primary still shows that we are now here at the resistance at the 78.6%, and that we could continue to the downside, at least short term, to fill this gap, because as I said, these gaps will very rarely stay open, especially in the spot markets. Okay, but once they are filled, that's what market will decide whether it will rebound back to new highs, which is possible because whenever gaps are filled, that's when flows will again change and we could easily resume higher. Or if we just will, for example, see some very strong rebound on stocks and we see a continuation towards 107, then of course this bearish interpretation is still valid. But overall, even if we go back to 110, I still think that we are here in late stages of this impulse of that higher degree wave C. Okay, so again, be very careful here. I would not be looking for dollar longs at this stage because markets are very volatile, and as I said, there will be other countries that will announce some new decisions, and this dollar strength can very easily be reversed. Here I'm looking at the Elliott wave price chart on the line, actually on the line chart, because I think it has a very clear price structure. So sometimes I look at the line chart because there are no such noise around the prices or levels. So I think that this is the most appropriate scenario if we suddenly see push to a new high, that we are still going to see a fifth wave up here, maybe even into 78.6% as I showed you on a daily, and then we will see a reversal. When it comes to US dollar, of course, the important is also what's happening on treasuries, and here we are still seeing a very nice rebound. We are still seeing that prices are doing quite well here, so I think that this recovery will resume, and if the US yields will continue lower, then of course US dollar could also find resistance. If we go further and we bring on dollar CAD, because it's been hit quite hard. Here I'm still looking at potential 5-wave rise away from that September 2024 lows, and because of an unfilled gap, I would not be surprised that we are now maybe trading and approaching big resistance up here. But I just realized that the next retracement could be just another correction rather than a bearish impulse here, and the reason comes from a daily chart. Okay, let me check from a daily chart, where we can see that this recovery here is a very strong one, right? And we moved into the 161.8 and close to 261.8 extensions of this wave 1 and wave 2. So it's a pretty important level, because this extended leg normally represents wave 3 of an impulse rather than final stages of some higher degree bull run. So I think that there can actually be more upside after the next pullback. As I said, trade war will not finish here. This topic will resume for the next few weeks and possibly even months, and this could cause some very unexpected both-sided trades here on dollar CAD, and maybe that's the perfect timing when we could see this wave 4 to unfold. But if you look here, why I also think that maybe wave 3 is now at the resistance is because we are testing some very important levels from January 2016. Here was March 2020, and now we are again here. And if we consider that this recent consolidation might have been a wave 4, then clearly I would anticipate some pullbacks. And as I said, gap is still open, and these gaps will normally be filled through the week, if not in the first 24 hours after the open. Now, if we take a look also on dollar Mexican peso, last time we talked about potential wedge formation here and ending diagonal. Still very probable here, because we gapped higher. We retested basically, if we connect the dots, the highs of the wave 1 and wave 3 swing highs here, we can see that basically we gapped right into that trend line and now trying to fill this gap. So not fully filled yet at 20.68. So I think that there's still a chance basically that we will see some more weakness. But if you look here at the whole price action, as I said last time, it's despite this current gap higher, I don't really see this as a continuation of a bull run, because it's a much slower price action, right? Much slower price action compared to the previous very strong rises. So usually this kind of a price activity will occur very late in this game. So if Mexico will respond, of course, this current price move can be reversed, and we know what happened back, as I said already last time, back in 2017. We have also seen a very interesting reversal weeks after Trump took office. So be careful up here, especially with longs. I just still think that later this year Mexican peso will make a hit back. Maybe even Trump and his administration will realize that if stocks will come to the downside, dollar will continue higher. Of course, they will try to bring the US dollar down, of course, and maybe that's also something that will try to cause this reversal if Trump will, or his administration will highlight that they do not want dollar to be too strong. Now looking at Australian dollar versus the US dollar. Now here we are still testing some important levels. We basically spiked once here at the start of the year below that level from 2022. You still have this 78.6%. That is very important one. We basically moved quite close to these levels, and now we are trying to reverse. Overall, I still think that this wave C is now in late stages, because I will show you the 4-hour wave count here from that wave B swing high, and we can count 5 waves down. Basically, I firstly thought that wave 5 has already ended here. Obviously, I was wrong on that one. We have seen a gap through some important supports, but I still think that the major reversal is yet to come, and that we should be patient here. Maybe in the next few weeks, maybe this month could be quite interesting for potential reversal. But overall, it's everything depends what will stocks do, okay? Because Trump and his decisions obviously brings a lot of uncertainty to the markets, and markets do not like uncertainty. That's why we are seeing this move to the downside on stocks. And if these things will not stabilize very soon, of course, we should be then prepared maybe on even lower prices here on Aussie as well, because we also know that Aussie is linked to China. If we take a look on the euro dollar, big picture, maybe the best shown is here on a weekly scale. So 5 waves up, and now counter trend movement. You're at the 61.8%. It's very possible that we will even retest parity, but I don't believe that we will move back to these levels from 2022. Of course, ECB is still dovish, so that's something that we have to consider, and Europe can be the next on the Trump's list. So maybe this will be one of the reasons why speculators will try to look for euro dollar to fall towards parity. But I still think that this is quite a strong, very big and important support down here. If you look maybe on a smaller time frame here, the wave counts that I'm tracking at the moment, as you know, my primary wave count last time when we had a webinar was that's an ending diagonal, and we had this very nice impulsive rise followed by this wave 2, and wave 2 is now very deep, not completely invalidated yet, and this gap is still unfilled. So I assume that we could fill this gap while we are still holding above this invalidation level, and that's in that area. Then we will see a big decision. Can we break through and continue even higher, or maybe we will just simply fill the gap and then reverse for a new low? But even if we see a new low, as I said, I still assume that euro will then be in late stages of this decline. So sometimes it's not easy maybe to recognize when the final low is in. This was definitely a pretty nice and strong rebound, and most likely I would count it as in a very similar way right now, despite this gap. But of course, I will be prepared on a new potential rebound if we retest lower levels close to parity, and then maybe we will try to look for potential new longs if we see any new impulsive recovery on smaller time frames from that area. looking at the dollar yen, Japanese yen is doing very well, and we know that it's because of the risk of flows, right? So Japanese yen is coming to the upside. They also BOJ also said that they could be looking for further hikes if data would point into this their hawkish direction. And from an Elliott wave perspective, I clearly see this as an impulse in this first leg here, okay, followed by quite sideways price action. So I came out with an idea that this could be possibly a triangle, maybe already finished, and we should be aware of further weakness down to 152 maybe, which is the 61.8% of this previous smaller degree 5-wave rise. So in the short term, I think that this dollar yen weakness, the bears are incomplete, that we have room for more weakness. Even if suddenly we will rebound and let's say that we break above 156, I still think that 157 would then be the second resistance that we should pay attention on. So overall, I just think that that most likely we will continue towards 152 rather than back to 158.59. If we take a look on gold, so last time, I'm not sure if I talked about this in gold last time. I know that I made some video analysis. I'm not sure if that was only for members. Anyway, so last time, what I was looking for before I left for skiing is that we basically were looking at two wave counts, right? And the first and the primary wave count still could be that we have a free wave rise to a new high, okay, and this can be wave C. But back then we said that even if that's wave C, okay, still we should be looking for more gains because wave C is a motive wave, and we identified a very strong support at 2730.31. The second wave count, which is bullish from a triangle, also was showing the same idea with a nice support around 2730 to 2735. So after this dip, we, as you can see, we are now flying to the upside to new all-time highs, and this trend could even continue towards 2850 for this week, especially if stocks will continue to the downside. Firstly, I was quite surprised that gold was trading to the downside, because if stocks are moving lower, if cryptos are moving lower, then obviously you would expect that gold will stabilize. But normally gold won't stabilize at the start, because everyone is linked to the risk of flows. It means that everyone is then will feel safer to be in cash rather than looking for some new investments like being gold. But after the initial drop, you will usually see that metals will stabilize and then move to the upside. But that's more correct for, or more true for, gold rather than silver. So gold overall, I still would be careful once we move into that area here around 2840 to 850. It's the upper side of this extended wave A, because if we are really in a wave B, then this should be our maximum upside objection. If we start breaking above that levels, then of course that's not wave B of this potential higher degree wave for flat correction. If we look at the daily chart, okay, maybe this one is better shown. So here I still assume that we obviously are trading at the highs, but we are at very strong resistance. So we still can see this potential flat formation for a wave 4, or if we'll just still continue to the upside, maybe we will be in late stages of wave 3. In such case, of course, I will adjust the wave count. But overall, I'm careful with gold here. As I said last time in some of the webinars, that even if gold goes higher, it's okay. But with what I see on silver, I just think that it's better for me to stay aside and be prepared whenever we see a potential next dip. I would be much more confident to look for potential longs at lower prices rather than being long from here. Since I mentioned silver, so here we can see that market is not following to the upside with the same degree. It's basically sideways. So that's something that I don't like to call as a bull run for metals. So that's why I think it's very important to be very careful here. So what could possibly unfold here is that maybe we see wave B high here of this wave 4 flat correction, or maybe end of a wave 3, and then we see a reversal lower, and at the same time we get this wave C sell-off, right? So wave B here could either be an ongoing running triangle, could be potential flat. The resistance levels that I would pay attention for on silver is at 32.30 and up to $33. That's basically the same range that moved beyond, measured in points that moved here beyond this wave A swing low. So that's the resistance area that we should be very careful on. And even if you look, maybe zoom this in a little bit, we can see plenty of overlaps in this recovery. So I would be still very careful, and I would not be surprised if we are riding into resistance here. Also, what's important is gold silver ratio. Normally when gold silver ratio is moving to the upside, it means that that's not a real bull run. You want to see gold silver ratio moving to the downside, and we can see that gold silver ratio is basically trying to break out of this channel. And if this will continue, then as you can see in the previous examples, there is a chance actually that silver will move to the downside, and possibly even gold remain or turn back into, not remain, but turn back into this fourth wave range. Looking at crude oil, as you know, I have been looking and tracking for a triangle. Crude oil failed to break above this trendline resistance. It was just a temporary spike before market reversed lower. And if you look closely now on a smaller 4-hour time frame, looks like that's a motive structure from that highs, meaning that there can be further downside after this current rally. I think that there was an OPEC meeting today, but there was no change, as this is what I'm reading now, won't make change to output policy. So basically all this crude oil will remain volatile based on these trade wars and based on potential Trump statements. As you know, he favors lower energy prices because he believes that this should be good for the economy. So maybe there is still limited upside. What I would watch for this week is resistance around 76. Let me check the fib levels here. It's 61.8%, so that's come around $76 here. So I think that that's a pretty interesting level for potential next sell-off. So the idea is here short term that as long as we are below these highs from start of the year, I think that this current pullback could last and bring us even lower. Now let's take a look on the S&P 500. So basically I can open this one. Okay, so where we are here on the S&P 500 overall, or stocks in general, I have to look at this chart, is that we are still obviously in this impulsive sequence. I think that there is room for further upside, but of course firstly we have to complete this consolidation. This consolidation possibly is already over at this recent January 09 low, but I know that because of everything what's going on, it's a lot of uncertainties, so there will be only a few buyers that will be ready to jump into this trend from here. But if you look here closely, we are basically having these three waves, okay, from that Friday January 24th high. So you basically have three waves down. You're basically now also testing the trend line of this corrective channel from the outside, and you're at the 61.8%. Plus we have this unfilled gap, and usually this gap, as I said so many times, will get filled. So I think that even if we see some just short-term recovery, still think that while the market is holding above these levels, that we could see at least move into this gap area. Maybe not today, but I think that Tuesday, Wednesday could be much more interesting days for potential rebound now when dust will settle through Monday. So for Monday I would stay aside, but then if we try to hold these levels, I think that Tuesday, Wednesday sessions could provide some bounce. But as I said, maybe this will be only temporary recovery, because we also have another interpretation here which basically shows that what if this was a flat correction, expanded flat here in wave B, and we are basically headed back towards this level from November 04th. If you recall, I was talking and mentioned a lot, we had a lot of discussion about this level because that's when Trump won the US election. So that's when market got completely crazy and moved to the upside, especially cryptos and other assets. And I think that that's major level, major support level. So whenever, if at any given point in the next 2 weeks, 1 week, whatever, we will retest these levels, I still think that this will be a major point for potential rebound here. So I will be watching this one very closely. Before we go potential to lower levels, of course, I want to see what will happen around this gap once it gets filled. And why I think that gaps are important is because it's quite easy to find or spot potential reversals whenever gaps are filled. Here is actually S&P 500 cash market. So here we have gaps, and you can see basically on Friday I posted this chart as well on Twitter, and I said that we have this gap here, or maybe I shared on Nasdaq 100, whatever. We said that there is price into this gap, which means that flows can change, and basically when gap is filled, market can reverse a direction. And now, as you know, market will open in a few minutes, and looks like that we can basically fill this gap in this week that goes and dates back to January 14th. Okay, so this will be another next important level to watch for. So if we fill this gap, I would not be surprised to see a rebound, because always when we filled the gap over the last few weeks, the market reversed. It was also the case here. If you look at this gap, it was also the case here. Even if you look back here to this was gap in November 06th, and we filled it then later on in January. So always when we are filling these gaps, the market could reverse. Could be only temporary, but definitely it's a very important, it can help you to identify very important levels or reversals on the markets. And of course, whenever stock markets reverse, that's when also cryptos could recover, okay, and other assets could follow. It's just not one market that depends on itself. It's all in correlations, and each market will have impact on the other one. Now here we also have German DAX, because I know that some of you asked for German DAX in the past. So what's happening here if we look in the 4-hour time frame and try to focus what is going on right now, well, we have a very nice and beautiful 5 subwaves down, up, not down, within extended wave 3 right into these fib targets. We sold off pretty sharply with this gap. So what we can expect, well, if you think you are in a wave 4, then wave 4 should be made by 3 waves, right? So basically I would expect wave 4 to unfold in 3 waves, because wave 2 here was quite sharp. So maybe wave 4 would be will have a different structure. It means that that's a rule of alternation. So watch out for a wave B rally, and then watch this gap around 21,600. I think that this one is pretty important, so it could be possibly limited upside for a wave B. But if you look to join the recovery once this dust will settle, then keep an eye on levels around 21,000. That's the trend line support connected from November 19, and that's the area of the 38.2% of this extended wave 3. So very important when trying to identify end of a wave 4. And also keep an eye on this distance of a wave 1, okay, measured from the recent swing high. So because If wave 4 is of the same degree like this wave 2, then obviously in some cases you will have a similar distance of pullbacks here. So this whole zone obviously looks quite interesting and quite attractive. But of course, as I said, wave 4 is a corrective flag. Firstly, we need to see 3 subdivisions before we may even try to identify end of this correction. Now, let's take a look on some of stocks real quick here. So PayPal, firstly, I'm looking at PayPal because I think that that's basically from earnings whispers. You can find them on Twitter, and basically at the end of each week they will post this calendar for earnings releases for the next week, and you can basically should pay attention maybe to PayPal, at least what I'm tracking, PayPal and AMD. This one should be very important. Watch out also Amazon as well. And looking at PayPal here, the earnings will be released tomorrow before the open, and what I'm seeing here, and won't change my views for now, is that still we are basically in a very nice recovery here. We could be in a wave 4. Of course, wave 4 could get a bit more complex if earnings will disappoint and suddenly we see some gaps to the downside. I still think that levels around $80 could be a very interesting and strong support. On the upside, I'm still watching for this 100 level, which goes back to this August of 2022 highs. Looking also at Tesla. Tesla is still testing these major support levels. We have a few swing highs from the previous peaks here, and basically recently we extended quite nicely to the upside here. So that was a wave 3, and now I think that we are in a wave 4, which could be a bit more complex, but overall I just still think that here around 360 to 400, this whole area is still very strong potential support. If we suddenly fall back below 300, then of course I would most likely label that we are already completed the bull cycle, at least for temporary period. What I have here, semiconductors. We've been talking about this resistance a few weeks back. We moved right into this gap, so you can see once again how gaps can be important whenever they are filled. So we moved into these gaps and sold off, and looks like that after rallies into these now gaps that are still opened, I think that we basically could see more weakness or at least tie sideways. That's definitely the wave structure that is not showing us the bullish continuation. In fact, I just think that this could basically continue to more sideways price pattern. Let's take a look also on Microsoft. Microsoft also, as you know, we have been sharing discount for a while. We said that that was a very strong impulsive decline, followed by a three-wave rise right into the 78.6%, and looks like that even this one still has a room for further deeper correction here for this wave 4. So if someone wants to or is waiting on these opportunities on some of the major single stocks here, I still think that it's better to wait a bit longer. Now let's take a look. MicroStrategy. Here it is. So MicroStrategy, I adjusted the wave count a bit. Here I'm looking at the log scale because I think it's much better to visualize this Elliott wave pattern and in which degree of the bull run we are currently. And what I see is some very nice pullback here, still headed or testing this this gap from November 08, and I think that that's a pretty nice and important support for this wave 4 retracement. And also if you zoom in a little bit, there is no way to count this as an impulse from the highs. So that's good thing for MicroStrategy, because I still think that we could see a rebound, could be a final rebound into the fifth wave, and then we see a potential completion of a higher degree bull run, which I still think will accomplish itself sometime this year. So for now, if we are really in a wave 4 here, then maybe even cryptos could be in a wave 4. Looking at crypto total market cap, we have seen a very nasty sell-off. A lot of liquidations occurred here, but if you zoom out a little bit, you can basically see that that's still firstly a free wave drop from the high, so it's not an impulse. Okay, it means it's not the top. There's always better to count in uptrend each pullback as a temporary and corrective when you have a free wave of retracement, rather than call it as a wave 1, wave 2, and then expecting a wave 3, a very strong move to the downside, especially if you do not have all needed subwaves that would complete the previous uptrend. So in my opinion, there's still very important to look for potential supports here and be aware of more upside. Of course, fear will always spread around these trade wars, and cryptos will fall significantly. But market will always try to get rid of weak hands. We know that there was a lot of optimism, and as I said already last time, markets, especially cryptos in general, won't just award everyone, because everyone was so massively long that markets have to liquidate some of them before we could see another push to the upside. It's just a total normal breather for the market. So it really depends how you are trading this market, but I always suggested that you don't do it with leverage. You always on spot, and of course just have like 10% of your portfolio on cryptos and have different coins, because otherwise you could be in very big trouble. So overall, I still think that crypto market could recover, because as I said, we have three waves to the downside, and if you look at Bitcoin, it's basically still holding this level from January 13, and the updated wave structure here shows that we could be in the middle of a correction. Okay, now sometimes when corrections get complex, it's not easy to confirm what kind of a pattern will unfold. Will this be a triangle, combination, flat, whatever? But what's the most important is to realize when the correction is finished or when we are in the middle of this process. So for now, I think that we are in the middle of this process, because even if it's a triangle, you are missing a few legs. You're missing waves D and E. So maybe we'll get some rebound now to try to fill this gap. If you look closely here on futures, you have this unfilled gap at just 102,000. So that level should be very important. Watch what will happen up there if we see this level. There could be, again, a lot of mania going on, because everyone will say, okay, we bottom, we are going straight to the upside, and then this will be filled and market will again make some deeper pullback, which would be the perfect case then for this triangle to unfold, because as I said, we are missing a few legs and wave E could then be opportunity. So the first thing we have to see is this gap to be filled and wave D to unfold, and once we see a wave E pullback, that's when new opportunities could show up. So that's why I'm saying that you have to be very careful, because the alternate scenario shows that what if that was a free wave drop for a wave A, that was a free wave rise for a wave B, and basically you will see a 5-wave drop for higher degree wave C, like that. Okay, let me just try to present you real quick here. Okay, and then you see something like that. So that's why I'm saying that even this wave count obviously is showing that we are in the middle of this corrective process. So that's why you have to be very careful here, and just not, maybe if you're looking for some short-term trades, just not jump and look for some opportunities immediately. Let the market settle down a bit and then try to discover opportunities through the week, because it's still only Monday. Okay, just let me check my list here. Ethereum. Ethereum, as you know, has seen a very strong drop here. We basically couldn't break this upper trend line month, 2 months back, and we are still in the range. But this triangle for now is still valid because we basically were able to hold this swing low from August of last year, and we have a pretty nice rebound. So there is a chance that market will actually hold these levels and maybe continue higher. What I also checked earlier is that we have these exchange inflows, okay, quite significant amount here. So looks like that some of investors are afraid that this market will continue to the downside. That's why we are seeing plenty of exchanges from private wallets to exchanges, and whenever we see some extremes like this one, well, this means that we could be closer to a potential bottom. Also, at the same time, I'm looking here at Bitcoin, looking at chain data of unrealized losses, and higher is the value, there will be more losses involved, and meaning that we could then be closer to a potential bottom. This has been the case here back in December, then that was on January 09th, and now maybe we could see something similar in February. So watch out what will happen in this one, because if we start approaching these levels here around 90,000, I would be even more confident that we are closer to a potential bottom. Also, short-term holders, if they are in a loss, it means again that we are possibly closer to a potential bottom, and this has been the case here January 09, and you can see that basically we are now already beyond these levels. So it looks like that there are a lot of losses going on, and again, if there are a lot of traders that are in a loss, there's a very good chance that basically the support is not that far away. Okay, traders, I hope that you enjoyed this webinar, this presentation. If you have any questions, if you are our member, make sure to visit us in our chat room, or you can easily just maybe join our services at wavetraders.com. So we have all of this covered on a daily basis. You can basically select FX or crypto or both, and we will keep you updated through the course of the week. Traders, thank you for your attention, and talk to you next Monday. Bye.